Let's bring in our guest analyst. That's going to be Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, thanks for being on. Your bat and clean up. The pressure's on you. You're going to have to try to make something out of nothing.
Yeah, corn market up a penny. Not a lot to write home about there. But I think, looking at this week as a whole, I think the grain markets are really trying to find their sea legs, so to speak. We know the volume got really thin in the last couple weeks of the year. Now we're starting a new calendar year. You got people coming back to the office, coming back to the screens, and ready to make decisions. But they're like, you first, right? And I think that's what the market's waiting on. We might not get that bigger participation move until we get into next week's USDA report, which everyone is very much looking forward to, and historically is a little bit of a market mover. So all eyes are on that. Obviously, Brazil, South America as a whole is going to continue to be watched very closely, specifically for soybeans. Brazil obviously got pretty decent rains, but weather in Argentina and Paraguay also look good. So that's been weighing heavy on the soybean prices. But we're right up against the June lows, the end of June lows near 1260. That is kind of a must-hold line in the sand for the bull camp. A break and close below there, and there is some air underneath, about 20 to 30 cents lower. So we need to see 1260 hold on a closing basis to round out the week to hopefully spark maybe a little bit of short covering into next week's USDA report.
As you know, I come from a producer's background, right? And I am guilty of being a little bit of a cheerleader for higher prices. I don't have that feeling now, though. I have a little bit of a negative feeling. I mean, it just feels like the risk is the downside, even though we've come down so far. What do you think?
Well, and that's the way that the funds have been playing it, too. If you look at the trend there, it matches up with the chart. The path of least resistance has been lower as they've been accumulating a net short position in corn to the tune of about 178,000 contracts. That's about 900 million bushels. So a substantial size there in the corn market short. And as of Friday's Commitment of Traders report, they were net long about 4,000 contracts. But after this week's price action, I think it's probably safe to assume that funds are now net short soybeans as well. And that in the face of the weather concerns that we previously saw in South America and a lot of private analysts lowering their expectations for Brazilian production. So the fact that the soybean market was selling off into production concerns from South America is certainly a little bit of a caution flag for things to come.
Yeah, that's what I'm feeling. All right, great stuff. Very well put. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures in Chicago. We'll be right back after this. Well, let's bring back in our guest analyst, who's been so patiently waiting in the wings, Mr. Oliver Slope. He's with Blue Line Futures in Chicago. Anything jump out at you when we talk about the livestock there?
Well, the cattle market started the year halfway decent, which is nice to see. The cash market, we saw firm up as well, and yesterday's 5-area average coming in at 175, so that's certainly encouraging. But I think there probably are going to be some hurdles here in the very near term that'll probably keep this market muted. But all in all, I think we'll probably remain fairly range bound. Looking at the April contract specifically, 170 on the lower end of the range, 175 on the top end. And obviously a lot of people kind of keeping a very close eye on the outside markets as we've seen volatility ramp up here over the last couple of weeks there. And if that uncertainty continues, I'd imagine that'd be a little bit of a headwind for the live cattle complex as well. Looking at the fund positioning, though, the funds have all but exited their massive net long position from the summer, now just at their smallest net long position since last January. So if we do get a bullish catalyst, there's potential to add. But for right now, I think just a range-bound market to start the year.
Yep, smells like that to me, too. Really good stuff. Thank you very much for your content. Happy New Year, Oliver Slope. Oliver is with Blue Line Futures in Chicago. I'll bring it back here to Nashville and hand it back over to Suzanne just one more time.
Last time. Cow Guy Close, of course, coming up at the top of the hour. Stay tuned for that.